Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, January 12th, 2022. Starting with markets, we have stocks up this morning, commodities up, crypto up, dollar flat, global bond yields flat to down. Big movers this morning, Japan's Nikkei 225 index up 2%, copper up 3%, nat gas up 5%. On the economic front, tight monetary and macroprudential policy, look that up, continue to weigh on nominal growth in the Chinese economy. So we have the credit data out for the month of December. Total social financing ticked down at 2.37 trillion month over month in December. That's the lowest print we've seen in since October. Now, new yuan loans ticked down to 1.13 trillion. That's the lowest we've seen since October as well. Total loans of financial institutions that slowed to 11.6% year over year. That's the lowest print we've seen since May of 2002. Taking it to the chart here, the reason I say this all the time that statistic, total loans of financial institutions, is the most important credit metric to track in the Chinese economy. It's because banks dominate the credit intermediation process on the mainland. China is a very unlike most sort of Western developed market economies in the sense that their financial sector is dominated by the share of banks in terms of perpetuate or in terms of providing private non-financial sector credit in that economy. If you look at it comparative to Japan, it's much higher in Japan, significantly higher than the Eurozone, and then not even in the same area code as the U.S., which obviously has a very high functioning, deep liquid capital market sector and all sorts of shadow financing that comes along with that. So, this is an important metric. It clearly shows that Chinese growth is still decelerating. Our models have Chinese growth decelerating into sort of mid to late Q1, and then eventually inflecting from there and potentially trending higher really into and through the year in 22. So, we'll let you follow up with our process in terms of whether or not we're long China and what we are could potentially be not or it could potentially be long or not long in China. But keeping it moving, headline CPI. We also got the inflation data. Headline CPI that slowed to 1.5%. That's the lowest print we've seen in 3 months. Core CPI would remain flat at 1.2% year over year. That's tied for the lowest print we've seen in 3 months. Food CPI minus 1.2%. That decelerated, lowest print we've seen since October. Headline PPI slowed to 10.3% year over year. That's the lowest print we've seen since August. And then lastly, manufacturing PPI that slowed to 8.2% year over year in December. That's the lowest print we've seen since August as well. With respect to today's probable range setups, got an overbought signal in the MSCI Emerging Market Index, WTI, and nat gas. Oversold signal in the U.S. dollar versus the Canadian loonie. S&P 500, that's bullish. VAM still minus 0.6% of downside versus 3.8% of upside. WTI neutral VAMs minus 10% of downside at the upper boundary of its probable range. Bloomberg Dollar Index neutral VAMs minus 0.4% of upside or downside versus 1.2% of upside. 10-year Treasury yield bullish VAMs minus 18% of downside versus 4 basis points of upside. Bitcoin Ethereum still bearish VAMs. Bitcoin minus 10% of downside versus 8% of upside. Ethereum minus 12% of downside versus 13% of upside. And then lastly, gold neutral VAMs minus 2.3% of downside versus 1.3% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, January 12th, 2022. Best of luck out there today.